Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Terrence Cheung, Director of Product Management at LiquidityBook, Chris Hurley, Director of Institutional Sales at CAPIS, and James Clair, President of Brokerage Services at ViewTrade. They join me to discuss the new T+1 settlement cycle for applicable securities and the necessary steps the industry needs to take to comply with the switch. Gentlemen, it's great to have you with us. Welcome to Trade Talks. Let's quickly go around the horn here. Terrence, we'll start with you. Where does LiquidityBook sit within the ecosystem?
So LiquidityBook is a technology provider. We are a SaaS trading platform provider with multi-asset support, servicing both the buy side and the sell side of the capital market. We, as a technology provider for T+1, what we have been focusing our energy on streamline communication between the buy side and sell side so that people don't have to use emails and everything will be electronic to reduce the communication time involved.
All right, and Chris, tell us about CAPIS.
We're an agency, thank you Jill, by the way. We're an agency only broker dealer headquartered in Dallas, Texas. We only deal with institutional clients who trade cash equity predominantly, but also fixed income and derivatives. And we deal with those clients daily on settlement. We also have an outsourced trading division where I'm helping on the buy side of the desk as well. So we're very attuned to what's ahead of us here at the end of the month.
I can imagine you certainly are in James, ViewTrade.
Yes, thanks, Jill. ViewTrade is a global technology solutions provider. The technology powers the various financial solutions for banks, brokers, and wealth managers globally, and we also provide, all the brokerage services as well.
Right. Terrence, let's put some historical context around what's happening with settlement from T+5, 3, T+3 to T+2. Why do settlement times matter?
So settlement time is, so with the reduction of settlement time will reduce counterparty risk. So a reduction of counterparty risk will reduce margin requirements for trading, for the brokers, and therefore, reduce trading costs and also improve efficiency and make the market more liquid.
Are there any lessons here from previous reductions in settlement times that you can apply to what's happening now?
I've been doing this 32 years. We went from T+5 to T+3 and then to T+2, where we've been for a while. For most of our clients, this is probably not going to be that big of a deal because they're already using technology to efficiently communicate instructions to the executing brokers. Most importantly though, when you have an asset manager that has clients that have their assets at a third-party custodian, that's going to be the key here, is affirming trades on trade date. We no longer have that extra day to settle. So accuracy and efficiency in not only sending instructions to the broker-dealer who executed for you, but also sending instructions to the bank custodian to make sure that everything reaches matched and affirmed status on trade date. If you accomplish that, then this should be pretty much a non-event. If you're still doing manual processes, sending allocations via email, sending emails to your bank custodians who are having to manually go in and affirm trades, then if you're late on that, then you're going to have problems.
I'm surprised they still do that from a manual perspective.
You'd be surprised. Most of our clients, I would say in the high 90%, are already using DTC suite of services or other competitors to DTC to automate that process. There are a handful out there that we've been talking to for the past 6 months saying, guys, you've got to get with the program here and make sure that trades are affirmed on trade date and that the instructions that you provide to us are accurate.
Yeah. James, is this a heavy lift from an operational perspective?
Well, operationally, there is a heavy lift. There is, at least with our client base, which is primarily a global client base, their staffing to really take the process that they've typically had that extra day to accomplish, and now push it down to an overnight process. So operationally, we've worked with a lot of our clients for a while now to prepare them, but primarily just providing the technology that they need.
Well, so this will have to be automated then, right?
Oh, automation is really the only thing that can get us to T1.
Right.
Without automation, without the technology, we couldn't be here.
Right. So what about, Chris, what about CAPIS clients? What are they focusing on? How are they preparing? What are some of the challenges that you anticipate?
Well, most of them are, I think, they've known this is happening, right? And so they have gone to the trouble to utilize DTC's suite of services to send their allocations systematically to executing brokers with the correct commission rates. That's usually the problem, is if the rate is wrong, then there's going to be breaks with the custodian. So communicating efficiently with us, most of them are already there. As I mentioned, we're focusing on the ones and we have a segment of clients, for instance, that are bank trust asset managers. They're not registered investment advisors, and they're the custodian as well. They have been a little more blasé about not affirming on trade date. So we've circled that small percentage of accounts that we have and have been proactive in reaching out to them to help them understand the importance of timeliness and efficiency on trade days.
Right. Well, I mean, Terrence, you're going to have to comply, right? So, like, what are your clients saying about this?
So our clients, like Chris said, right, we want to compress, because we want to compress the settlement life cycle, all the bottlenecks has to be eliminated, right? So a lot of our clients, our buy-side client, are trying to get that allocation instruction to the executing broker as soon as possible. So some of them, they don't have capability to send messages over fix. So what they do is they want, oh, you know what, let's increase the number of batch processing so that we don't delay the broker in applying the instructions. Let's double check our static data to make sure commission rates and fee calculations are correct. At the same time, our sell-side clients, they're more willing to pay for the client's post-trade fix connections now. So you know what, because T+1, get your vendor to talk to my vendor, let's connect via fix so that you can send this to me as soon as possible. And that's, as a technology provider, that's what we're focusing on right now, to try to get rid of the paperwork with emails and chat, like, you know, as much as possible.
Right.
Terrence brings up a good point about if a trade is complete at noon, there's no reason to wait until 4 o'clock to submit it for clearing, right? And so processing batches or using fixed technology to send the instructions to say, okay, this trade is complete, go ahead and submit it for clearing, that makes a lot of sense. It makes the end-of-day processes that much easier. A lot of my buy-side clients have had to have you know, discussions with their portfolio managers to say, guys, we have to get these allocations on a timely basis. If your order is complete and you already know the allocation, communicate that to us now so that we can eliminate the bottlenecks that Terrence referenced.
Right, and there are several bottlenecks that we're talking about. In addition to what Chris mentioned, but the buy side have to send the instructions to the sell side, right? The sell side also has to send that to the clearing brokers, and the buy side has to send that to the custodians. So in a sense, there are 4 bottlenecks that could be batched right now. Now, usually buy side volumes are probably not that high for the day, so even if something breaks, they can probably fix it manually. But think about a broker with like 5,000 to 6,000 orders a day. You know, if the 8 p.m. patch didn't go out, then the next day you'll be stuck fixing hundreds of, you know, breaks. I don't think the SEC has imposed any fines yet for T+, and I don't think we did in 2017.
No.
But
What if you don't comply with T+1?
Well, then you have failed to settle.
Right.
Yeah. You have no choice, right? I mean, this is a mandate. The entire market is settling on T1. All of the trades that you're executing, you're settling on T1. I mean, this is not a...
So DTC was settle with the buy side on T1,
Right.
and then you have to settle with DTC's late.
So how does this impact, James, how is this going to impact international companies?
Well, internationally, it's a much larger impact, obviously, because the timing difference is tremendous, right? When you are 12 or even 13, 14 hours ahead, your T0 is almost T1 already, right? Locally, there are FX considerations, right? When you are trading multiple markets and you're trading out of one market to trade into the U.S., which is still on a T2, right? In Europe, they're still trading on a T2, and we still have till what, 2027 at the earliest, which I think that may be pushed up, given the disparity and the misalignment of what's going to happen with the various settlements. Things like the ETFs that trade T1 in the U.S., but it's a global ETF. So the underlying components of that ETF are settling T2. That misalignment is...
It's going to cause mispricing.
Yeah, there's going to
cause price increases for sure, because the market makers that are creating the price, they have to factor in an extra settlement day, an extra day of market risk. Right. So while ETFs and ADRs will also be affected, because any underlying that trades in Europe is still on T2, the market makers who are going to have to widen spreads a little bit to protect themselves to cover that extra day of settlement. Right. A problem that gets solved here in the U.S. is if you're an asset manager that has your clients' money in some open-ended mutual funds and individual stocks, now those both settle T+1. So before you had stocks T2 and mutual funds T1, so that problem's solved, but now you have different problems.
I mean, a wider
overseas.
spread is not what asset managers want to hear.
No, they don't want to hear.
I mean,
I agree. Yeah.
The whole point is you want the liquidity to get the tighter spreads and the ability to settle in such a way. But you had mentioned before, Chris, let's call it for domestic shares. If it's settled, it's done at 12 o'clock. Why not real time? Why not T+0?
Well, that's a good question. Terrence and I were talking about that before we came on the air, and India is already experimenting with T+0. They're already at T+1 for years.
They've been on T+1 for 1 year,
yeah.
And they did it in the phase approach. Unlike us, we're taking a big bang approach. But they are also looking into T0. And if you look at China, China has been on T0 for domestic stocks, for domestic investors for the last 10 years.
Right. So then, do you think in the U.S. we could start domestic with a phased-in approach?
I think we'll get there eventually. I think that as Terrence and I agreed earlier, it gets exponentially more difficult to go from T3 to T2 and T2 to T1. When you go to T0,
and what does it really mean?
Right. What does it really mean?
Yeah. Are you settling in real time, like something crypto that trades on a blockchain?
Right.
Or are you saying, oh, T0 just means end of day? So there's a big difference between capital markets and crypto.
So real time and T+0, there's a big distinction there.
Right. So like we may go hit T+0 at 7 p.m. But if you look at that, how is that different from T+1 at 11:30 a.m.?
Right.
Right. With T+0 in real time, the reason we can't do it is we have trading sessions. Market actually ends, and then there's a post session. Unlike blockchain, where trading is 24/7.
Right. So I mean, is it because the infrastructure is antiquated? Like, why not move it over to blockchain?
I mean, we can, but that's a much bigger discussion.
That's something that will happen tomorrow.
Many more moving parts there, right? The infrastructure to move to a T0 is yes, what we have today would be considered antiquated, but given over the next 2-3 years, the infrastructure and the technology could certainly support that.
So how's China been able to do it over the past 10 years? If they're doing T+0?
Well, so China is only T+0 for domestic traders. Right. And I think it's only for buys. For sales, since you're getting cash, that's T+1. So there's still some limitations and I actually don't know how they do it with T+0. But with us, I mean, we're, number one, we're not an ID market. Like we have off-exchange trading. So a lot of trading is different from China.
Yeah. I feel like our markets are much more complex.
Correct. Much more mature as well.
Well, yeah.
Right. And much more similar to European markets. So if we make that move, then we're also forcing the Europeans to make the same move. And I think there's some difficulty in that as well.
Right.
Otherwise, then you have fragmentation, and then you have like, well, if they don't move, then we have two different settlements for multi-leg assets and also for ETFs, ADRs, and all that stuff.
Right.
Yeah. Do you anticipate any technical challenges with? It's not necessarily integration. It's an upgrade, I guess, if you will.
Well, it's an upgrade, but it's an upgrade to all parts of the system, right? You can't. It's the theory of the weakest link, right? So if one part of your infrastructure cannot support it, you know, the whole system doesn't work. So implementing the technology into say a client's infrastructure is you can introduce it and you test it and allow that it works, but there are, you mentioned the operational risk, the operational work that has to be done. You know, things like the T1 to T2, you're almost working two sets of books, right? You've got your T2 settlement here, your T1 over there, and if they're supposed to talk together, there's technology can only take you so far.
And this takes place May 28th. Oh,
Yes.
Right.
Yes.
Right.
May 27th for Canada and Mexico.
Right, because.
And then Memorial. So we have like 1 day to see what happens north of us and south of us, and then May 28th is
What if you
that's what
have
happens.
not started the process to comply with T+1? I mean, it's too late? Or?
Well, if you've not started, you're a little behind the.
It kind of reminds me of GDPR, where firms were waiting a little bit last minute, and it gets costly to do that. And
Right.
I think that if you're still using manual processes, you haven't taken the steps to automate, then you're going to be pushed into it by the other participants who are.
well, you won't be able to play in the sandbox.
You won't be able to play in a sandbox. You're going to have to move. There, you know, DTC does have some very low-cost options for clients that don't have any sort of access to it. So it's not necessarily just a cost constraint. Although with, you know, order management systems and these systems do carry a cost. So some smaller managers who have been deferring that cost and doing things manually are going to have to get with the program, or else they're going to find that this is just too difficult. They're going to have to staff up. They're going to have people working after hours to make sure if there's problems that somebody's there to deal with it. The problem is the custodians aren't going to staff up. Yeah, everyone's still going to go home at 5 o'clock.
It's like clearing options on Saturday morning.
The broker dealers are going to
Back
go
in the
home.
day.
So you're, at some point you're going to be forced into it. You might be able to get through the early stages of T+1 manually, but eventually you're not going to have a
And DTC is forcing them too, right?
Yes.
So DTC is publishing these like scorecards for broker dealers to see how much straight-through processing you have, how much failures you have. So, you know, there's some level of reputational risk for the broker if they don't comply.
Right, and as we mentioned earlier about the penalization, right? There are no penalties initially, but I think if there are recalcitrant or repeat offenders on settlements, I think they may step in and you know and look at these firms and force their hand.
All right. So last minute here, Terrence. Within 6 months, is there a way that we'll be able to quantify that this was a success?
So looking back at India, I think from what I read, after they moved to T+1 last year, there's a significant increase in failure to settle. And, but that number gradually went down. And then now it's just a normal thing. So I think in 6 months, we'll see a similar pattern that you know, there will be some headaches, and the people, the brokers, they are late to this process in digitalizing their clients and you know, implementing straight-through processing for their downstream processes. We'll have to have
you guys back in 6 months to see exactly how well the industry did, and we'll leave it on that note, guys. Thanks so much for the insight.
Thank you, Jill.
And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.